taking us through their individual visions. David Dahl, he's CEO of Sequent Asset Management. Peter Schiff, the CEO of Euro Pacific Capital, and our own senior economics reporter Steve Leisman join us with their predictions here. David, start with you. What are you looking at? Especially, I mean, bear in mind, we're going to be still feeling the effects of the fiscal cliff, and technically we're going over it tonight. Does this affect your thoughts about investing in 2013?
Absolutely it does, Bill, and it has. The last 2 months we've seen a marked retreat from U.S.-based investments after U.S.-centric holdings, the S&P 500, S&P 100 showing strong leadership in the first 10 months of the year. What we've really seen is now foreign markets picking up the slack as investors have voted with their feet. So I would say that when we look into 2013, the opportunities most likely exist outside the United States, not here in the U.S.
David, outside of the United States is a very large geographic area. Can you narrow it down for us, like Asia, Europe, Africa, emerging frontier? What is it?
Yeah, of course, Mandy. And that's part of the asset selection that you have to do. For us, one of the best areas we've seen has been in emerging market debt. You know, it started out many years ago with the BRICS, and recently we've moved in the last 5 or 6 years to the N11. By looking at those emerging markets where we can have sovereign debt, maybe moving even towards corporate debt, and relying on a manager, a good fund like the Fidelity Advisor Emerging Market Fund, that's where opportunities exist.
Peter, I'm really interested in what is going to be the key driver of the markets overall. I mean, I'm kind of sick of politics being the driver, right? Because it means that we're not really being driven by fundamentals. We're being driven by bickering out of Washington. We're being driven by headlines every other hour. What will drive the markets in 2013, and will it be justified?
Well, if people understood the fundamentals, it would be a whole different story. I think the fact that so many people are still confused about what the fundamentals really are, we're in some terrible shape here in the United States. And I think the message that we are sending the world with respect to the negotiations to avoid the fiscal cliff is that we are never going to address the fundamental problem. We're not going to stop the spending. We're not going to stop the debts. The Fed's going to keep on monetizing the debts until we have a currency crisis. That's the bottom line. We're going to have to be forced to act responsibly. And if the dollar's going to come down, I think it could come down a lot in 2013, then that's another tailwind rather, for investing abroad. And I agree with your guest. I like a lot of these emerging markets. I like the action, particularly in the last couple of months, in a lot of the Southeast Asian markets. We've been investing in places like Indonesia, down in Mexico, some of the more exotic locations. But you got to get out of U.S. dollars. And I'm surprised that gold didn't do better in 2012.
Peter, why would you invest in the country whose terms of trades are getting worse, rather than in the country, the United States, with a depreciating dollar, where the terms of trade are improving?
Well, a weakening dollar doesn't improve your terms of trade. What that does is it makes it more expensive.
That's exactly what it does.
No, it doesn't.
It helps export.
The dollar, Steve, the dollar has been depreciating for decades. And look at our trade deficit.
It's not been depreciating for decades. It's been up a while.
Yes, it has. Where you been?
It's not.
Steve, do you see a significant depreciation of the U.S. dollar in 2013?
I don't see a significant depreciation. I think what's really interesting is what we've learned is that if you weren't paying attention, the dollar is the world's reserve currency. All the things that have gone wrong here in the United States have put people into what? Into dollars, into dollar-based assets. The ability to fund the deficit goes on without much hiccup at all. We're still paying ridiculously low rates for borrowing, 1.7%. All those predictions
they were paying ridiculously low rates in Greece a few years ago, too. This is a mania. It's a dollar bubble. It's a treasury bond bubble. Will it burst in 2013?
People have been saying that forever.
Well, maybe. It's going to burst eventually. The bubble has to burst.
And they've been paying the same low rates in Japan.
It's not a model to say something bad will happen eventually. That's not a way to talk about the future.
And also, Peter,
your model about being a Pollyanna and having your head in the sand didn't work very good.
Peter, you
How did you miss the
say.
housing crisis? How did you miss the financial crisis? How did you miss the stock market bubble?
I have no idea what you're talking about,
you missed it all.
Peter, I have no idea what you're talking about. I was one of the first reporters to report on the housing and the mortgage crisis. Yeah, and I'll show you the clips, Peter.
You were one of the guys that was laughing at me when I was forecasting.
Can I ask a quick question to you,
Peter?
Ridiculous, Peter.
That you were out in front
of it. Like a lot of what you say, Peter,
you reported on it after the fact.
Guys.
And when the bubble bursts in the U.S. bond market, when the dollar tanks, I'm sure you'll be there to report about it.
Something bad will happen eventually, Peter. Excellent investment thesis.
Time out, guys. I have a question for you, Peter. If you're predicting currency crisis, and a significant depreciation of the U.S. dollar, Where is the money going to go to? What is a good alternative reserve currency at this stage?
Well, there is no good alternative.
Thank you very much.
What you want to do is go back to real money. Gold is the best alternative because none of these fiat currencies are any good. But certainly, compared to the dollar, other currencies are not nearly as bad. And the world does not come down to the dollar or the euro or the yen. There are a lot of other currencies out there where the central banks are not being anywhere nearly as reckless.
Australian
and you can
dollar,
have a
for
better
one.
return.
Australian dollar.
Look, I own the Canadian dollar. I mean, look, I used to call it the Canadian peso, but, I'd rather own Canadian dollars than U.S. dollars. That's how bad it's come in this country, where I think that Canada has better fundamentals than we do.
We've got to leave it there. We've got to leave it there. Great discussion, guys. I'm still rooting for the little Aussie battler, the Australian dollar. Phil, over to you.
Happy New Year.